Warm greetings to our viewers and welcome back to Bulletin Bites. Latest news on law, tax and business in India. As we head into the final quarter of 2024, several key factors will shape India's economic performance, namely moderate growth forecast, challenges in agriculture, government spending and elections, inflation and RBI policy, private sector consumption and investments, and ever-changing global economic environment. This quarter will be crucial for maintaining India's growth momentum while addressing inflationary risks and revitalizing domestic consumption. On that note, let's recap Quarter 3 via Bulletin Bites. Let's begin with FEMA updates. The Reserve Bank of India has introduced new rules to simplify the process of compounding foreign exchange law violations. Individuals or entities can submit a common application with a fee of INR 10,000 plus GST to the relevant authority. The resolution process is expected to be completed within 180 days. It is to be noted that offences relating to money laundering are prohibited for compounding and therefore are not under the purview of the said rules. In Maharashtra, the government has mandated the establishments include insurance policy details in their compliance forms. Businesses with 10 or more employees must submit an insurance certificate at the time of registration or renewal. This is aimed at enhancing protection for both workers and businesses. The Ministry of Commerce and Industry has introduced a new quality control measure for aluminium cans used in beverages. Effective March 14, 2024, these cans can only be imported, exported, or sold in India if they have obtained a mandatory BIS license. This is aimed at ensuring the quality and safety of these products in the Indian market. In a significant move towards sustainability, the Ministry of Environment, Forest and Climate Change has notified the Ecomark Rules 2024. These rules certify 17 product categories, including cosmetics, batteries and textiles that are produced using recycled materials. Manufacturers can apply for the Ecomark through a government portal and must submit annual returns. This initiative promotes sustainable consumption and production. Moving on, the Insolvency and Bankruptcy Board of India has amended the corporate insolvency resolution process. An interim representative can now be appointed for certain creditor classes, which aims to streamline the process and ensure fairer outcomes, especially for large groups like home buyers. There have been some important rulings given by the courts and tax tribunals across the country. In a recent judgment by the Delhi High Court, some important points to decide whether a taxpayer is a contract manufacturer or not were deliberated. In the said case, the taxpayer was engaged in manufacturing of electronics with the help of technical know-how provided by the parent entity. For such know-how, royalty was paid to the parent. The tax officer, during assessment, disallowed the royalty payments by suggesting that the taxpayer is a contract manufacturer of such parent and royalty cannot be allowed to be paid in such cases. After analysis of the facts, the court held that the parent entity had no control over the manufacturing activity of the taxpayer and it can't be said that it acted as its contract manufacturer. Thus, royalty payment cannot be disallowed by tax authorities. As you would have heard from time to time, the topic of intra-group service has always been a highly disputed issue. In this background, there has been a recent ruling of the Delhi Tribunal, where the arm's length price of the service transaction was accepted under TNMM method. However, the important point to highlight in this decision is the taxpayer had maintained documentary evidence to justify actual receipt of services for its business. The said ruling is important for all the companies that receive centralized services from their group, but do not maintain documentary evidence to support actual receipt of such services. The 54th meeting of GST Council was convened, which decided a few issues based on representations received from the industry with respect to GST rate and classification. As an outcome of the meeting, various clarifications are issued by the government which are resolving the disputes for the industry. Further, the GST Council also considered the representations seeking clarification with respect to the benefit of amnesty announced in the Union Budget and issued suitable clarifications. Further, the Central Board of Indirect Taxes and Customs has also issued guidelines for implementation of invoice management system and new RCM ledger for GST compliance purposes. We will also like to inform you that for exporters, the government has announced the extension of benefit under remission of duties and taxes on export products scheme, which was expiring on 30th of September 2024 to September 2025. And for units availing the benefit of EOU, SEZ and advance authorization until 31st of December 2024. On the direct tax front, the effective date for Direct Tax Vivad Se Vishwas Scheme 2024, brought in with a view to settle the pending income tax appeals, has been notified as 1st of October 2024. Further, new rules and forms related to the scheme have also been prescribed. Taxpayers are encouraged to evaluate their pending appeals and avail the benefits available under the settlement scheme. Income tax demands raised on taxpayers as a result of faulty processing by the Centralized Processing Center of Income Tax Department, that is the CPC, has been a concern for a long time now. In one recent case, the Honorable Supreme Court has taken note of faulty software program of the CPC leading to such erroneous tax demands and has directed the Income Tax Department to take immediate steps to upgrade the software. In another interesting decision, the Delhi High Court has upheld the proposition that profits of a permanent establishment, that is PE of a foreign company, shall be taxable independently irrespective of whether the foreign company incurs a profit or loss at a global level. The Delhi High Court opined that activities of a PE shall be independently assessed and determined in light of the language of tax treaties, which lays emphasis on functions, activities performed and risks undertaken. In today's world, where there's too much of knowledge all around, getting the right knowledge at the right time is a challenge. For the accounting and reporting practices as well, this plays a very pivotal role. As an investor, it is important to have access to the correct and relevant data for an informed decision making. Of course, our legal disclosure do provide the explanations in notes and discloses the relevant facts. But the question is, does this suffice? Does the typical financial disclosure help out the stakeholders in getting the relevant information? Let's debunk the myths here and see what an enhanced reporting framework would do for an informed decision making of the stakeholders and the regulatory authorities at large. Dive into our BPO section of the newsletter for more details. Dear viewers, with this we would like to conclude our Bulletin Bites. As usual, for detailed information, refer to our newsletter and get in touch with us. If you found this bulletin informative, please press the like button, share it with your colleagues and friends. Stay tuned, stay safe, and stay updated.